Are you ready to understand how the 2025 housing market could change, and what these political and economic shifts mean for you and your future? The housing market is about to face some of the biggest challenges it's seen in years. With policies like mass deportations, massive layoffs, tariffs, mortgage rate uncertainty, and the potential privatization of key housing giants, these economic changes are coming fast and hard. But here's the thing. While these changes may seem confusing, understanding them could help you make smarter decisions. Stay tuned, because in this video we're breaking down these issues in simple terms and helping you understand how to protect yourself, your home, and your investment. Let's dive right in. 1. Mass deportations and housing demand. Let's start with mass deportations. You've probably heard a lot about immigration policies, but how does it affect the housing market? Well, here's the deal. The Trump administration's push to deport undocumented immigrants is something that could directly impact both the supply and demand sides of housing. First, let's talk supply. In the construction industry, up to 19% of workers are undocumented, and if mass deportations happen, a significant portion of the labor force could be sent out of the country. This could mean fewer people available to build homes, or the remaining workers might demand higher wages, ultimately raising construction costs. You may see a slowdown in new home builds, or prices may rise because of these labor shortages. Now let's flip to the demand side. If fewer people are living in the US because of deportations, there's simply less demand for housing. This could mean fewer homebuyers and renters. But here's the important part: deportations aren't new. For example, President Obama's administration deported nearly 2.9 million people during his first term alone. So, while this could still have some impact, we might not see a huge shift in demand unless there's something drastically different this time around. While it's still too early to predict exactly how this will play out, the housing market is largely driven by supply and demand. And as we've seen in the past, even with deportations, the effects on housing might not be as dramatic as we think. 2. Government layoffs and housing affordability. Next, let's discuss government layoffs. The US is facing some serious debt issues, and when a country is deep in debt, tough decisions have to be made. The Trump administration has been cutting government spending, which could lead to widespread layoffs in federal agencies. If large numbers of government workers lose their jobs, the housing market could be impacted in a couple of ways. On one hand, laid-off workers will have less money to spend on housing. This could mean that fewer people are looking to buy homes, reducing demand. But on the other hand, these same workers might need to sell their homes to free up cash. This could increase the number of homes available for sale, potentially driving prices down if there's a surplus of homes on the market. Layoffs could also lead to more foreclosures. People who lose their jobs may struggle to keep up with mortgage payments, and the rise in foreclosures would flood the market with more homes, which could reduce prices further. 3. The tariff effect on housing prices. Now let's talk about tariffs. On February 1, 2025, President Trump imposed a 25% tariff on lumber imports from Canada, one of the largest suppliers of lumber to the US. So, what does this mean for the housing market? Lumber is a major component of home construction. If prices go up by 25%, it could make building homes more expensive. Renovations could also cost more. And here's where things get tricky. When prices increase, fewer people may be able to afford the homes that are being built, leading to a decline in demand. If construction costs go up, we might see fewer homes being built, or existing homes could become less affordable for first-time buyers. 4. The mortgage rate roller coaster. Let's dive into mortgage rates, which are another key factor in this housing shakeup. Mortgage rates are high right now, hovering around 7%. That's much higher than what we've seen in recent years. But here's the thing. Mortgage rates are not directly controlled by the government. They're largely influenced by the Federal Reserve's interest rates. The Federal Reserve is trying to keep inflation under control, so they've been hesitant to cut interest rates significantly in 2025. But Trump has promised to lower mortgage rates. The question is, will he be able to deliver on this promise? If mortgage rates stay high, fewer people will be able to afford homes, and that could slow down the market. But if rates fall significantly, we could see more buyers entering the market, making competition tougher and driving up prices. 5. Privatizing Fannie Mae and Freddie Mac. And lastly, we have the potential privatization of Fannie Mae and Freddie Mac. These government-backed entities help provide liquidity in the mortgage market by buying up loans from banks. This helps banks continue lending. But there's talk of privatizing these companies, and if that happens, it could cause big changes in the housing market. If Fannie Mae and Freddie Mac become private, they might not be as willing to buy every mortgage from banks. That could make it harder for banks to lend money, which could lead to higher mortgage rates. Higher mortgage rates would likely reduce the number of buyers on the market, which could cool down the housing market even more. Conclusion: how to prepare for the housing market shakeup. So, with all of these changes happening, deportations, layoffs, tariffs, mortgage rate uncertainty, and privatization of key housing players, it's clear that the housing market is facing a lot of uncertainty. But don't worry, because there are ways to prepare. If you're a homebuyer, keep an eye on mortgage rates and housing prices. Be ready to act fast if rates drop or if prices start to stabilize. If you're thinking about selling, understand that competition could be different in the near future, and the market could shift depending on how these economic changes unfold. The bottom line: stay informed. These changes might take time to impact the market, but if you stay ahead of the curve, you'll be better prepared to make smart choices for your home and investments. If you want to learn more about these trends and how to navigate them, be sure to hit that subscribe button, like this video, and leave a comment below with your thoughts.